Hey everyone, welcome back to the channel. Today we're diving into one of the biggest challenges that all Bitcoin investors face, volatility. We all know how Bitcoin's price can fluctuate widely, but that doesn't mean you can't still profit and grow your portfolio. In this video, I'll show you some smart strategies for surviving Bitcoin volatility in 2024. We'll talk about dollar cost averaging, holding for the long term, and other investment tips that minimize risk while ensuring you're still in the game for those big gains. So let's get started. Bitcoin's volatility can be nerve-wracking, but is also part of its appeal for many investors. In 2023 alone, Bitcoin's price surged and fell dramatically due to everything from interest rate changes to regulatory news. But understanding that volatility is driven by these macroeconomic and global factors helps you prepare and make better informed investment decisions. As Bitcoin matures, the market will likely still experience wild swings, but with the right strategies, you can ride those waves safely. Dollar cost averaging is a simple yet powerful strategy where you invest a fixed amount into Bitcoin at regular intervals, regardless of the price. This helps smooth out the ups and downs of the market and ensures that you're not putting all your money in during a price peak. Historically, DCA or dollar cost averaging has shown to be effective for long-term Bitcoin investors as it reduces emotional decision making. With Bitcoin's potential growth over the next decade, DCA can help you build a strong position without worrying about short-term volatility. If you're confident in Bitcoin's long-term future, holding or HODLing, as crypto veterans call it, can be a great strategy. By holding Bitcoin for several years, you avoid getting caught up in the daily price swings and allow your investment to grow as the market matures. Historically, Bitcoin has rewarded long-term holders with massive gains for those who bought during dips and held through volatility. Now, if you believe Bitcoin is here to stay, as I do, HODLing is certainly a great way to survive and thrive through its unpredictable price cycles. As the crypto space evolves, smart contract blockchains like Ethereum, Solana opening up new avenues for diversifying your investments by tokenizing real-world assets, in other words, RWAs. Imagine owning a fraction of a luxury property or gaining exposure to traditional financial assets like government bonds through blockchain technology. Now, platforms such as Mantra, Ondo Finance, and even emerging Bitcoin layers are making it possible to tokenize real estate, treasuries, and indeed other tangible assets. Now, this not only helps to hedge against Bitcoin's volatility, but it certainly offers new ways to grow your wealth in tokenized versions of physical assets, all while benefiting from the security and transparency of the blockchain. Now, these developments are creating massive opportunities for investors to build a diversified portfolio that bridges the digital and the physical worlds. Many investors try to time the market, buying at dips and selling at peaks, but even seasoned pros find this nearly impossible. Instead of stressing over timing, focus on consistency. DCA and HODLing strategies take the guesswork out of investing and provide a structured way to profit from Bitcoin's long-term growth. It's about minimizing risk and maximizing your chances for consistent gains over time. When the market is volatile, the best advice is to stay calm and stick to your plan. Emotional decision making, on the other hand, like panic selling during a dip, often leads to regrettable outcomes. Instead, rely on proven strategies like DCA and HODLing to guide your investment decisions. Remember, Bitcoin's long-term outlook remains positive, and by sticking to your plan, you're setting yourself up for future success. That's a wrap-up for today's video. Navigating Bitcoin's volatility doesn't have to be overwhelming. By using the smart strategies like dollar cost averaging, holding for the long term, and diversifying your crypto portfolio, particularly into real-world assets, you can certainly survive the wild price swings and come out stronger. Remember, it's all about consistency and sticking to your plan. If you found this video helpful, be sure to like, subscribe, and hit the notification bell for more tips on how to thrive in the world of Bitcoin and blockchain technology, and certainly in the world of future finance. Thanks for watching, and I'll see you next time.